Hello and welcome. I'm Jonathan Beale and this is the ASB Investment Podcast, a show that keeps you up to date on the market and helps you make smart choices with your investments. ASB Senior Wealth Economist Chris Tennent-Brown is back to give us an update on the market. We're talking about business confidence, share market performance and interest rates, and answer the big question, could interest rates even get negative in New Zealand? These are entirely our own views. It's not investment advice, but we know plenty of experts at ASB that'll be happy to chat if you need. Chris, welcome. Great to see you.
Yeah.
I haven't seen you for a while in the booth, and we're actually in a different booth today. We've moved away from Ponsonby. We're in Epsom Newmarket Borders, I think.
Yeah, it's pretty cool. I like the sofa.
Yeah, I got the sofa. You got the 1970s chair.
Yeah.
But, looks pretty comfortable there.
Yeah, we look like rock and rollers, but that's about as far as it goes.
I don't think we look very rock and rollers, but you do look as though like you're about to get on a plane and fly. You've got like an old, is that a Boeing hat you've got on there?
Yeah, it's an old Boeing hat. I'm into all that sort of stuff. It's nearly the weekend, so I'm nearly getting ready to start pot riveting some bits on my Spitfire in the garage.
Yeah, now I was going to bring that up because I've had a number of emails from customers who listen to the podcast, and we've had some really lovely feedback about the conversations we have, but most of the time they're actually at the bottom of the email going, can you give us an update on how Chris is going with the Spitfire? So we want to give our listeners what they want. So what is actually going on with the Spitfire? Where are we up to?
Okay, so pretty much all the bits are in my backyard now, and I haven't made too much progress because I realised once I got all the bits there, I needed a bigger shed. So for the past month or so, I've been making a bigger shed and been doing this gigantic stock take, and now I've got about 10,000 parts that I need to join together.
And is it? I imagine is it a bit like a Lego set? Have you got like a manual that says you need to build this bit first and then add this bit? And is that how it is?
Join bit A to bit B. Yeah, there's some cross between Lego and Meccano, but with some far greater consequences if you stuff it up.
Oh my goodness! And have you got a plan on when you think you'll get it done by, or?
Oh, a couple of years, hopefully.
Oh, okay. Well, as I said before, I really admire what you're doing, and I'm looking forward to seeing it. I probably won't get in it and take off with you, but
yeah, a number of people have said that. And how about you? What's been happening on the work front and on the record collecting front?
Yeah, work's been really busy. We're doing lots of getting out and about around New Zealand, which has been enjoyable. I'm pretty excited tonight. We're off to see U2, so that's so I've been reminiscing a little bit with my birthday present. I think I talked about before about my record player. So I've been cleaning my vinyl and putting it down and playing a lot of U2. I'm sort of reliving my youth a little bit. I've got the original Joshua Tree album with the sort of gatefold open, and I've still got the lyric sheet that's in it. So I'm sitting there sort of relearning the words and sort of remember, what is it? It was like 30 years ago.
Yeah.
Well, it was probably more than that now. It was probably 32 years ago they released Joshua Tree. And I remember sitting in my sort of parents' living room with the old Amstrad stereo and putting it on and just playing it over and over and over again. So I'm really looking forward to something a bit exciting. And I can pretend I'm sort of 18 again, which is always a good thing to do.
Yeah, that's it. That was how old I was when I went to my first U2 concert. But anyway.
Wow. Okay, so I could talk about U2 all day, but why don't we talk about a few different things today? I might we'll get to sort of trade war and Trump towards the end, but why don't we start with sort of questions I'm getting asked a lot is around interest rates. We've seen the Reserve Bank continually cut rates over a number of periods and times, but the question I'm getting asked about is negative interest rates. There seems to be a lot more questions around that. So are we heading towards negative, and what do we actually mean by negative interest rates?
Yeah, it's really interesting, isn't it? I mean, we have been beating on this lower for longer drum for such a long time and warning that the Reserve Bank could cut rates. And now when we're talking about, as an economics team, will they stop at 0.5% or could they get a little bit lower? Clients have jumped one step ahead and are saying, will they go negative like they have in other countries? And one of the reasons why I think people are talking about that is the Reserve Bank itself has been talking about other policies they could have if the official cash rate, which is their main instrument that they use, reached a level you couldn't, was at zero. So there has been a bit of a chatter about that. And for the record, we're not expecting interest rates to go negative in New Zealand, for the Reserve Bank to cut their official cash rate to negative. But when people are chatting about this, just to wind it back a notch, there's two or three things that I think they think about. One is, in some parts of the world, central banks have got a negative official cash rate setting. So what that technically means is if a bank wants to bank cash overnight, banks park their cash at the Reserve Bank overnight, they'll get charged to do it. So it's a disincentive for banks to hold a lot of cash. It makes them want to get out and lend it. So that's one mechanism, and Japan, Europe, Switzerland, Denmark, they're countries that have got a negative official cash rate. The next step on is, what if governments are issuing bonds and then the central bank's buying them, like we see in Europe? It's happened in the UK, it happened in the US. Now, in Europe, they've been buying so many government bonds, and the same in Japan, that they've caused the interest rate that you receive to go negative. Yeah. So in other words, they're buying a bond that they expect in 10 years' time to get less money than what they paid for it, which just seems bizarre, right?
Yeah.
But that is happening. They're not hugely negative, but you don't get your money back at the end of the life of it, and you certainly don't get any compensation for inflation, is what you'd normally think. And then I think the third thing, which is where the rubber hits the road for the questions we're getting from clients, is, can term deposits get negative? In other words, you put money into the bank and the bank charges you for it. Now, again, we're not expecting that to happen in New Zealand. It hasn't happened in Japan, even though they've got a negative official cash rate setting.
Has it happened anywhere? Or?
Yeah. Yep, there's places in Europe where effectively if you put a large deposit with the bank, it'll get shaved back a little bit. And of course, one of the things which happens then is people go, well, I won't stick my money into the bank. And if you're talking about a cheque account or something like that, or $5,000, you can imagine the logical alternative is, well, have a safe and keep that money at home.
Because you spent a lot of time in Japan. What do people in Japan do with their money?
Well, in Japan, I checked the rates yesterday, and for something like a 10-year term deposit, it's a 0.1% interest rate, so nothing. And literally, when we talk about savings, we talk about things like, do you put your money in KiwiSaver or a term deposit or whatever. When I talk to my in-laws about what they do with their money, they talk about places around the house. They do tanzu saving or tatami saving. Tatami is the mat on the floor. Tanzu's the kitchen drawer.
Oh my goodness!
And Japan's a very safe place, so maybe having a decent pile of yen tucked away feels not too bad. But of course, a lot of the houses are made of wood. And they have a few tsunamis, so you risk that you lose your money through natural disaster. So fireproof safes are not a bad thing to look at investing in if interest rates start heading towards zero.
But you and the economics team and other economists in banks around New Zealand, no one's calling that we're going to have negative term deposit rates.
Yeah, and the argument this year has been, will they get down to 0.5% or 0.25% or maybe even have a zero official cash rate? So. But a negative official cash rate would be the first unconventional thing that they could do. But it wouldn't necessarily mean that you've got a negative term deposit rate. It could just mean that term deposits just keep on grinding down lower and lower, and they've fallen down to around 2.5%. This year, and so if the official cash rate kept on getting cut lower and lower, they would just keep on grinding down like they have this year. Maybe another 0.5%, maybe 1%. And if we look around the world, countries that have got not even negative official cash rates, but places like the UK, the US, Australia, their term deposit rates have got lower than our term deposit rates here, even without their cash rates getting negative. But that's where the direction of risk lies. But I think we're a wee way away, and it's certainly not something we're forecasting that term deposit rates could turn negative like they have done in parts of Europe.
Yep. And then on the flip side, share markets continue to do pretty well and are performing. And I suppose we've talked about this before, but a lot of that is potentially to do with the income you're getting off fixed interest solutions is so low. Where can I go and get that extra yield and that extra growth? Which seems to be driving a lot of the share market returns around the world, and particularly here in New Zealand.
Yeah, and I think one of the other things central banks can do beyond weird things like negative interest rates is commit to keeping interest rates low for a long time, or at least signal that's what they're going to do. And the Reserve Bank of New Zealand's been one of many central banks doing that. So people are definitely getting used to this idea of, hey, I'm not going to get a high return from a conservative investment. And so, exactly like you say, if it does make them seek out other investments, or likewise, it can make you comfortable with a return that you would otherwise think was quite low. Now, if we were paying 8% on term deposits, people probably wouldn't be very happy with the 5% dividend yield they're going to get out of a stock these days. But if you're getting 2% and you're scared that it's going to get even lower, then a company with a good track record that shares are paying out a 5% dividend yield will seem way more appealing. So that's signalling from the central bank about how long they expect to keep rates low. And that general feeling about that is what's feeding into shares.
And the other sort of question I'm hearing a lot is around, so the Reserve Bank keep reducing interest rates, but the government don't seem to be reacting. So why aren't they spending more? Why aren't they trying to stimulate the economy a bit more and growth and get some inflation back into it? That seems to be like an almost obvious thing to do. Is this becoming a bit more politics, or?
Yeah, I think this is one of those things that's a real pity and a bit of a bind that we've got ourselves into. We've had this real focus on fiscal discipline in New Zealand for a long time, and as a consequence, government debt in New Zealand as a percentage of GDP is very low on a global basis, under 20%. And interest rates, it does feel like we're pushing on string at times. It's not turning confidence around. And so I think both here and in Australia, for that matter, fiscal policy or government spending is really a more realistic way of trying to stimulate the economy when it's going through a softer patch. Now, if you were on the extreme left, you would say that should come through the government spending on particular things. And if you're on the extreme right, you'd say that that should come through tax cuts, and the middle ground is the usual thing that people look to the government for is, hey, why don't you bring forward some infrastructure spending? And I think, hey, we're running into an election year, so we'll probably see lots of talk about what should be done on that front. And we always try to be reasonably neutral in what we say, but we've been pointing that out as a practical thing to pick up the pace of the economy a little bit. And the Reserve Bank itself, I'm sure, like that message as well. They know that they've still got things that they can do. But the government is in a good position to do some of the lifting.
And when we had BlackRock over here recently talking, and their global head of one of their departments was talking about how other I think it was talking about European companies, how their governments are buying sort of assets rather than just buying into government bonds and treasury and stuff, actually buying assets. Is that something that maybe the New Zealand government would look at, or?
Well, if you're reflecting on the last 10 years, we've done the opposite. The government sold down some of those key state-owned assets that they had, such as their stake in Air New Zealand as an example, and sort of divested and wanted to invest money elsewhere. Where I guess we've seen it here is the superannuation fund has bought quite a range of New Zealand assets, but that's more from an investment perspective rather than something tactical to try and stimulate the economy in the short term. If we look at the Bank of Japan, though, boy, they've bought a lot of assets. They're not limited to just going out and buying government bonds and cutting interest rates. They've bought all sorts of assets. So Reserve banks never want to look like they're running out of ammo and that there's no options left. Our Reserve bank's got a few, and the government's got plenty. I mean, this is one of the things that I think is so good about New Zealand. Is that on both fronts we've got ammo if the economy does go through a really soft patch or faces something really bad. And it's worth just checking in on that here. We're not talking about the economy going into a really bad patch or a recession or anything like that. We're just talking about 2% growth when we'd like the economy to grow more like 3%.
Because if you read the sort of business confidence surveys, you think we're going to go into a really deep recession for quite a while. But I'm not convinced that business confidence equals the economy's not going to grow. There's a sort of subtle difference around the measure of confidence, isn't there?
Oh yeah, and businesses have forecast a lot of recessions that the economy's never had, but they do seem to have quite a few worries at the moment, and some are really understandable, and you see it within their actual results. There's no doubt that the labour market's getting pretty tight with the unemployment rate down these sorts of levels, and that's a constraint. There's no doubt that there's not a lot of inflation in the economy. Firms are finding it hard to increase prices because customers have got ways of finding cheaper quality products in many areas, the internet for one. So some of these things are real, but low business confidence certainly doesn't correspond with poor economic performance on a one-for-one basis or poor company performance. And I look at, over the course of this year, how various businesses have responded to the obvious pressures of cost pressures, of the costs of holding stocks. And good businesses, it's how they respond to these challenges that determines their outlook. Now, Kathmandu's a good example. That was a company that share price really weakened early on in the year. People worried about a few different things, including high inventory levels and threats that were to its sales outlook. But they weren't sitting around going, oh yeah, that sounds terrible, let's give up. They had a growth strategy, and their share price has really turned around in recent times because people have liked that strategy. They've bought into other businesses, and that's what good companies do. I mean, Fletcher Building's an example of a company that's definitely faced some challenges, but they're not sitting around going, well, let's just keep doing the same stuff. They're selling down parts of the business. They're really trying to fix it, and that's what businesses do. It's really interesting to see.
Yeah, I'm so glad you used the word businesses, because I get a bit sort of fed up a little bit when everyone always talks about shares, and there's sort of like this generalization of shares, but actually what you're actually buying is a share in a company or in a business that actually is trying to grow and has a management team who want to grow and going to make decisions. And your example of Kathmandu is a great one, because then people go, well, what are they going to do? Well, they're going to sit down, they're going to respond, they're going to try and look at different markets. Fletcher Building has, as you said, has some trouble. Like Air New Zealand will be another great example of who'd have thought that their sort of long-term flights to London, they go, actually, we're not going to do that anymore. But it's obviously not making money. It's a highly competitive route. Where else can we go? That's like forward thinking, isn't it?
Oh yeah, and you can't sit around doing things for nostalgic reasons. And the London flight's a great example. Air New Zealand's a business that in earlier times faced some big challenges, but it really reinvented itself. And I think most Kiwis with pride would see it as a real New Zealand success story. And rightly so, but they've done it because they've been nimble and been prepared to change. And so just because you're not confident about the landscape that you're doing business in doesn't mean you're going to do poorly.
Yeah, exactly.
And it doesn't mean your share is going to weaken. And your point is absolutely right. When we're making investments, we're not just buying a share on the vague hope that it goes up. We're buying into businesses that we believe will keep on making good decisions, and when they don't, they go the way of the dodo, and that's what we're doing. And then that's one of the things I really like about my job, is just seeing how businesses cope with the challenges. And one challenge that's a new one that we weren't expecting, we had the gentailers, we call them, the electricity companies that generate and retail. They've been the darlings in this low interest rate environment, because they provide a steady income stream. But they've taken a bit of a hit in the last couple of months, as a bit of a question mark over Tiwai Point, which is a big electricity user, about the future of that business. But again, those companies will not be sitting around going, oh, let's just wait and see what happens to us. They'll be coming up with strategies.
That's a good example, though, of if people are holding those types of companies in a portfolio, that you've probably bought them, or they've probably been recommended to you because of the dividend stream that they're paying, not the capital growth that they're looking to get. I think people forget sometimes the income stream still being paid. It's just the value of that share has gone up or down. But if you've purchase it because you want an income to be able to do what you want, it's still a great investment for you.
Yeah, and New Zealanders, for all sorts of reasons, are very focused on capital growth. Capital growth through property, capital growth through the share market. But ultimately, for most of our investors, what they're wanting to do is generate some sort of income stream so they can consume in the future the assets and investments that they've accumulated and made today. And we can lose sight of that when we get fixated. And I don't help because I go, the share market's gone up 10%.
It's your fault.
Yeah, but ultimately the income stream that these investments generate is so important.
Because you always talk about a share over the medium to long term should give you about sort of 8 or 9%. You're always very smart about breaking it down as to sort of half being the dividend, half being actually the capital growth. People sometimes forget that, hey?
Yeah, and we're lucky here. We do pay higher dividend streams than elsewhere, which does make that quite obvious.
And then sort of moving a little bit away from New Zealand and sort of to global equities and more sort of like what's been going on in the US. So Trump seems to be in a bit of trouble around, just can't keep his nose out of other people's business. But also the trade war seems to be almost sort of finding a sort of maybe a happy ending even.
Yeah, I think Trump really needs to score a few wins at the moment. The global politics and the situation in Ukraine is pretty messy. And so he needs to get some wins. And so I don't see a lot of substance in this phase one of the China trade deal that they might get this time round. But what's got everyone upbeat at the moment is that it looks like they'll roll back some of the tariffs and commit to continuing to work forwards. But hey, we're only a tweet away or an announcement from the Chinese that it's not going well, and we could get disappointed again. But over the last month or so through October, sentiment improved, and US share market's at an all-time high. So investors are definitely thinking, right, there's a way through this, and companies themselves, their reporting season in the States has been right. And like we're saying before, at the end of the day, that's the important bit.
Exactly,
are companies delivering on what they say they're going to do? So sentiment globally has got a bit better. Gee, I'll leave it to you to decide what's going to happen with Brexit.
I don't even like you talking about it. It's just so embarrassing. It's nearly as embarrassing as the England rugby team not putting their medals on. But it's. I think it's ended where most people thought it would end, with us going to a general election after they could agree what day the general election was on, which seemed another whole. It's gonna play out. I think how a lot of people thought, but
Boris is going to try and go where Theresa thought she was going but couldn't get to, which was securing a stronger majority and a mandate to see this.
He just
through.
needs to get it through, so he needs more people on one side of the house, and I think that's what he's probably going to push for. But he is very reminiscent of what's happening in the States, and I used to watch him on If I Got News for You. Like he's a bit of a buffoon when it comes to. He's a very smart buffoon, but he comes across. But he potentially is going to get in and have four to 5 years, and a bit like Trump's had 4 years, and is probably going to end up with another. I was reading an article this morning. He's probably going to get another 4 years. It's a bit odd, isn't it?
It is odd, and in the case of Trump, if he can galvanise. You don't even need to galvanise half the population. You just need to galvanise half the voters, which is about 50% of the population, to believe that, hey, you're a safe set of hands for this really tricky job. And hey, if the share market's going up and jobs are still getting created, the president's hard to get rid of. Now we could also wonder whether he's going to get impeached between now and then in Trump's case. But boy, he's been in some sticky situations since before he got elected, and he still seems to get away with it. So, I don't know what will happen with Brexit, and I'm certainly not ruling out another 4 years of Trump. Either way, it'll make for some summer reading, I guess.
Yeah, well, I think we're in the best place in the world though, because the sun's out. It's nearly Christmas, and we've managed to get through 2019 in a pretty good state, I would say. From an investment point of view, people have had good returns over the last 12 months, certainly.
Yeah, the global shares have really picked up over the course of the year from that big drop we saw last year. Yeah. New Zealand's come a little bit off it, but it's within a few percent of its highs. And I think the interesting thing over the next year will be if some of these things like Brexit resolve themselves, that the China trade dispute resolves themselves. How long will we have these ultra low interest rates? Because even if they lifted up 0.5% from here, they're still really low. So next year we could well be reflecting on what's been a nice year of recovery, but actually with still a lot of the things that we've worried about this year. Where do interest rates settle? Will we have Trump for another 4 years or not?
These are the questions that we need to answer, and hopefully we'll get there one day and we'll know what's happening. But Chris, it's been lovely talking to you as always, and great to hear that the Spitfire is moving forward, and I'm a bit surprised you have to build a garage before the Spitfire, but it sounds it. But thanks for explaining things as well as you always do, and look forward to catching up with you again soon.
Good stuff. Thank you.
Thanks for joining us today on the ASB Investment Podcast. If you have any thoughts on today's episode, or if there's anything you'd like us to discuss on future shows, please fire your suggestions through to podcasts@asb.co.nz.